All right, guys, welcome to tonight's charting session. It is July 19th. It is a Wednesday. Hopefully, you guys have been having a good day. Let's just jump right in. So, going into the day, first thing I want to start off is we're going to take a look at ES here on the daily time frame. Now, looking at the daily, we have just opened up this candle here, which is the Thursday candle going into tomorrow, and we do have this big fair value gap, which we'll go talk a little bit about later. So, because that'll be a play into what we're going to be looking at tomorrow. But going into the morning, looking at the 15, actually zooming in a bit here, we can see market opens around here right when we end up taking this buy side level here. Now, first thing I noticed going into the day is this clear sell side level, right? We have 1, 2, 3, 4, 5, 6, 7, 8 equal lows. 8 equal lows on ES. What is this? This we know is going to act as a magnet. We know that this is going to probably get taken out, right? Probably in the session as well. So this was kind of my main focus going into the day, and I was expecting these lows to become the draw on liquidity. Now, I didn't have an insane bearish bias, though, because of the recent action we've been seeing, right? A lot of the time, whenever we expect to see more of a flush, we get a big push to the upside. If we look, past where we were here, we sweep buy side, come down, sweep internal just to see new highs. And kind of that's what I'm expecting to see here. Come down, sweep internal, possibly see new highs going into tomorrow, but we'll talk about that later. So going into the morning, zooming in here on ES, looking at the 1 minute, we ended up, boom, getting a big push up. Again, same exact thing that happened yesterday that happened today. Literally the exact same thing, and we're gonna talk about that in tonight's charting session because, again, if the exact same thing happened, I want to talk about the importance of it and being able to recognize it, because the people that were in the live session when it happened, they can attest that I pretty much told you it was the exact same thing that was going to happen from the previous day. So on ES, we woke up exactly like yesterday. What do we expect? ES getting a massive push to the upside. What was NQ doing at the time? Absolutely melting, right? Exact same thing that happened yesterday. Let's zoom into the 1 minute here. Let me go to where the morning. See, morning buy side taken, right? Morning ES buy side taken, NQ buy side taken. But what happens? ES ends up breaking through this with big volume, looking to see new highs, while NQ gets a big rejection to the downside, right? So automatically, there's no really correlation between markets right at the open. So of course, we're going to stay a little bit more patient, right? Let the market kind of do its thing. NQ finds support at this low. Once we come down, we sweep this initial low. We end up getting a nice little bounce here, and we end up running to that previous high. Again, still kind of chopping a little bit. And then we end up pushing back up. On NQ, we end up putting in this 5 minute fair value gap. Now, what I'm expecting to see is if this ends up getting broken through, then I would expect, or if we continue to respect this, I would continue to see that the draw on liquidity would be lower, right? So this is what our sell side level was. Notice at the time when we initially came down here, we didn't take this level, right? We didn't take sell side. We ended up retracing back to this 5 minute fair value gap and then rejected back down. I was looking to take shorts here on NQ, but there was no fair value gap on this pullback. So I was a little bit more patient, and then we ended up selling off, taking that low out. And then once we took this low out, keep in mind as well, I want to zoom out to an even bigger time frame of where we were. Is we were back inside of this 30-minute fair value gap that we had. We had a 30-minute fair value gap. We're super bullish. We just swept that internal sell side level. What am I watching to see now? Right. So this is what I'm watching to see. At this point in time, I am not necessarily fully bearish, right? Because I haven't gotten any displacement to the downside yet, right? Here, let me take off all this old stuff so I'll add this back later so we can clear up the charts a little bit. But I'm not fully bearish yet, and because we've had no displacement to the downside, right? We've swept this buy side level, but looking at the 5 minute or looking at, any sort of, little bigger time frame, looking at a 3 minute, we put in a low here, and at the time I'm saying, okay, for me to have confidence that the draw on liquidity for now is going to be this low, we'd have to get displacement through this level, right? Because right now we're still holding that past fair value gap, right? We just swept these lows here, we just swept internal, and now we're getting displacement back up. So that's telling me that we do not want to sell off just quite yet, right? So this is telling me markets probably want to head back to whatever that buy side level is. And at the time as well, ES is still looking very strong. So ES is already still running. So what am I expecting on NQ? Well, if NQ gets a bounce, ES is already running, so I'm expecting ES to probably run with it as well, right? So what do we find here? This is what I want you guys to look at right here. Now, it's funny because at the time this was inversing ICT. And I think ICT just failed to recognize this at the time because he made a tweet about it and he said that he made a mistake, but he should have been, we literally would have longed exactly where he went short. And I'll tell you why. So, looking at ES and NQ here, right? We see ES, or NQ, sorry, we come down, we sweep sell side, we're bouncing off that 30-minute fair value gap, and notice there's no displacement through this level on a bigger time frame. So that's telling me the draw on liquidity, if we can get displacement back to the upside, we're probably going to go to that high, right? So notice, we get big displacement back to the upside. Now, exact same thing that happened yesterday. Look at this. Initial people that enter long, right? All these people that enter long on this fair value gap, put their stop right here. All right, first price target hit, whatever this is right here, right? All right, let me move my stop to break even. What do you think? Again, thinking like an institution. If I'm an institution and I want to head to buy side, because I think, again, we're in bullish markets, and we sweep sell side, and I want to generate liquidity, I'm going to go to whatever that recent low is to stop all those retail traders out before entering my position, right? So I enter long, market comes up, half off, put my stop to break even. Where do you think all of those retail stops are resting? Right here, right? Because again, we're forming bullish model. We've swept internal. We're bouncing off 30-minute displacement to the upside. Initial entry here. We come back down, stop all of those traders out. And exactly what are we expecting to see here? SMT. Looking at ES and NQ. Where is that low? Actually, we weren't forming SMT, were we? Oh, no, we were forming SMT here. Sorry. I knew we had an SMT. I was like, where was this? ES sweeps this low. NQ does not. What ends up happening? Institutional order flow entry drill. Now, what would be my entry? Now, I do not enter right here, though. What I said I'm watching for is this fair value gap. Now, this is where ICT went short. This is a terrible, terrible short here. I'm expecting an immediate run to buy side. Why is that? Right? Everything that we've been saying. Internal swept. Even though we swept buy side, we're failing to displace lower. Also, intraday macros. We come down, stop out all of those traders. Now, at the time, I'm saying, okay, if we can break through this fair value gap, I'm expecting this to become inverse fair value gap. Meaning, if we can break through it right here, which we did, boom, right when that taps back in, again, showing what's being respected, what's being disrespected. Come back, respecting bullish fair value gaps. Breaking bearish fair value gaps. Breaking bearish fair value gaps, right? Going right through it. All of these things are telling me the draw on liquidity is higher. Once we break through this, wait for the retest as an inverse fair value gap, and we end up going exactly what happened yesterday. Straight up move to that recent buy side level. Literally straight up move to that recent buy side level, right? So exact model that lined up with yesterday's trade. Pretty much to the T. So that was an opportunity. I ended up not taking this at the time because ES and NQ were a little bit distinguished. I wish I did. Now, I did take it on a paper trade account because I wanted to test. I didn't take it on the funded, but I said that I was going to take it on the paper trade to test price. Now, the reason I didn't is just at the time, I think I, was possibly a little bit hesitant on it. But yeah, starting tomorrow, I do want to be a little bit more aggressive with those kind of trades, though. So then after that, ES ends up coming up, instantly gets a big sell-off to the downside out of nowhere. We get a big sell-off here. The initial long, actually, we did take a long here, didn't we? So I took a long here on ES where I was wanting to take on NQ at the, actually, wait, where was this? Let me see. We took right here, then we pull back. Yeah, okay. So this was a trade here. I ended up, where was my, wait, was this right? Is this the right entry? I think it was. Yeah. So for this trade, I ended up targeting these equal highs here on ES. Looking at the 5-minute. We ended up coming back down, sweeping this little low here. Retracing back into that 1-minute fair value gap. Actually, that 1-minute pass fair value gap here. We get displacement back to the upside. pull back to the fair value gap. I'm targeting equal highs. Out of nowhere, big sell-off. This is absolutely manipulation move out of nowhere. I don't even think macros were running at this time. Yeah, literally manipulation macro. And this move fakes out a lot of traders to the downside. And I'll say why. Because after this move happens, a lot of the times we're expecting to see lower prices. And at the time, I was as well until we would break through this. So right after this happened, we get a big move back down. Now looking at ES, I want to see one or two things, right? Because if I'm looking at this, I'd be like, okay, well, this is, would be market structure shift. We have big displacement. I would look to short this, right? But if I'm looking at the 30-minute, look at this high being swept here. What is this? This, to me, is not buy side being swept. It is, but this, to me, is more of a market structure shift or a break of structure than it would be a sweep. Because look at the displacement we get through this level. We absolutely run through this level. So when we end up seeing this pullback on ES, we're expecting to go straight to sell side right here. I'm not. Why? Because to me, this is break pulling back to now discount of whatever this premium is, right? You can see we pull back to OTE. We reach back into discount. So what am I watching? I zoom into the 5-minute, and I see this fair value gap here. A lot of the times people are looking to short this. I'm not. Reason is this massive wick here, instant rejection to the upside. When I see this, I want to see ES break through this inverse fair value gap and then pull back to enter long. So I end up taking this long in the PM session. Once I see markets reaching for buy side, breaking through this inverse and showing no resistance to go back lower, this to me looks like clear low resistance liquidity run, right? All of these stacked lows, as well as these 3 equal lows at the highs looking to see get taken. When I see a bounce, we're bouncing off 30-minute fair value gap. We're in discount. We get break of structure back to the upside. We're disrespecting this bullish inverse fair value gap. When I see us come back down here and then get bought right back up, I look to take a long. I see this fair value gap. I enter long right in this fair value gap, targeting those highs. I put my stop at the bottom of this wick here, and we ended up getting a nice run up to take out that high on ES. So that was a nice little trade, and that made back all of the losses, or all the first loss that we ended up taking in the morning. So the rest of the day, I didn't take any other trades the rest of the day, but I do want to look at the price action and see if there was anything else. So the first thing I want to talk about is, again, we had all these equal lows, right? We knew this is eventually probably going to get taken out. So what would I look for? Number one, 15-minute, we had this massive fair value gap here. This is kind of going to be the thing that I want to watch to possibly see us expect to go lower, right? Because at this point in time, we swept that high. We're starting to get moved back down. We're pulling back into this 15-minute fair value gap. If we can respect this and get displacement back to the downside like we did here, I would expect us to go back lower. And at the time, again, I wouldn't, again, right here, this is untradeable because this is the end of the market, so I wouldn't even look to take any sort of trade here. The only trade I would take would be this. ES coming down, sweeping this initial low. Again, looking at the 15-minute, we have this fair value gap here. We know we want to probably come back to this to validate this because we never reached discount in the first place, right? So we put in this low. Again, if this was the low, we never reached a discount. So we put in a new low now, expecting to go back to OTE. What do I look for? I zoom in. Market structure shift. We put in these lows. I do want to check. Did we form SMT here at the lows? I'm not sure if we did. I think we formed SMT on a bigger time frame because NQ took that low here. Yeah, so the SMT that we were seeing was, where was it? Was this low at the time. So it was like this. So we did have bullish SMT because NQ already swept that recent low. Again, what do we look for? Big displacement back to the upside. This would have been your early entry here. Again, all these equal lows, sweep. What am I waiting for? I'm looking for a high to get broken through with the big displacement. Again, displacement equals fair value gap, right? We need displacement to create a fair value gap. We sweep this low. Really good risk to reward on this trade. Really good risk to reward on this trade because we just swept this low. You put your stop at these lows here. and your first price target should be whatever that recent high was. So this was that long opportunity that you could have taken on ES. Put your stop at the low, and this would have been a really nice trade on ES that you could have taken. After that, I wouldn't have really looked to take any short here because, again, it's right before market close. But on NQ, I would say this is probably the best trade you could have taken. If you didn't get that initial entry, what I would have taken is this inverse if it got tapped into. Now, it looks like this might have gotten tapped into right here. Once we break through this candle close kind of tapped in actually to the tick right here, which you could have got tapped. But other than that, once up here, I wouldn't really look to take any sort of trade. If you didn't get in down here, I think it would be a little bit late. I took shorts at 249. I'm guessing that was probably that 5-minute fair value gap, huh? Yeah, we had this bearish 5-minute fair value gap after respecting that 15-minute. Going back down. Not bad, but again, at this point in time, or time of the day, I wouldn't take that. Thoughts? I knew it's end market, but nice setup though. It's not bad. Yeah, it's not bad at all because we didn't sweep those equal lows. It's not a bad trade. Let's look at NQ and see if there's anything else as well. Let's see. So I actually did like this looking back. Now, actually, we didn't sweep this low. So we have sell side resting here, right? We come down, we put in a low, forming relative equal lows. We have sell side here. We end up coming up, putting in high, reject, high, reject, high, reject. We can see that notice price action, right? Price action is key. Look at just recognizing how this action moves. Okay, we have buy side. Notice, no displacement through this level. There's no desire to go higher. Okay, we put in a new high. We break it. No desire to go higher. Instantly rejects. Okay, we put in a new high. Instant rejection. No desire to go higher. New high. Instant rejection. No desire to go higher, right? We are failing to push every single time we go, right? What are we expecting here? We're starting to dry out, right? Buyers are showing not a lot of willingness to push through. So sellers come in, push us right to sell side. So at this point in time, we see us come back. We're still holding this 5-minute fair value gap. So again, if still holding that, I would expect the draw to be higher. Let's zoom in, see if there's anything on the 1-minute that could have potentially been a setup. Doesn't look like it for me. We already reached that buy side level. The only really setup that I would have possibly taken, again, that first initial one right here, once that inverse. But after that, to me, there wasn't really anything else. I mean, you could have maybe taken the short. So the short setup would be this, right? Number one, you have this broadening formation, right? You have this kind of sweep here. So again, I would need to see displacement to the downside, right? And if I'm looking at this kind of chart here, notice that there's not really, after this initial move here, we create these relative equal lows, right? So after creating relative equal lows, we still have some form of sell side that we want to see get taken. So we end up coming up, sweep buy side. Okay, I'm looking to see displacement to the downside. We get displacement here, no fair value gap, so there's no trade. All right, we come up, still forming relative equal lows at the high, so I wouldn't really, again, no displacement to the downside, no fair value gaps. Displacement to the downside, but we sweep this low. So again, still no trade because we're not getting displacement through any sort of low here. Then we put in these highs and we get all of these kind of wicks starting to shoot, right? Big wick, big wick, big wick. Again, rejecting to go higher, right? Price action is showing us that we are struggling to get some sort of move to the downside or some sort of move to the upside. And then we start getting some big candles starting to come in here, right? Now, me personally, I would not have taken this short. For me, this is too tight and there's no displacement through this low. Because what I would be looking for is I would be looking for displacement through this low. Meaning, if I was to take a trade, I would have probably looked to take it in this fair value gap, which actually never got tapped back into before that original sell side level was taken. Now, that external sell side level, though, that was going to be, again, the overall draw on liquidity on a bigger time frame, is this. Again, if I zoom out, this is our significant low. So this is the actual draw on liquidity. This is internal draw on liquidity, right? So looking at the 15-minute, I wouldn't have taken this 15-minute short either because sell side's already been swept. But notice where we are coming back into. Our daily bias kind of started to play out here because, again, what were we looking for? Come back to discount of this range. Looking at the 4-hour, we're tapping back into this 4-hour fair value gap as well as this daily fair value gap. We're also back inside this big 1-hour fair value gap that we've been looking for. So what do you guys think my bias is going into tomorrow? Probably bullish. So I am going to be bullish going into tomorrow, and I'm going to be bullish until we break through this. If we end up breaking through this 1 hour fair value gap, then I would expect the draw on liquidity to be this recent low here. So zooming in, we have a lot of these fair value gaps starting to form. Again, we kind of have a gap here, so I would like to see us come back to this. And I would expect this gap to end up getting filled tomorrow. So a lot of what ends up happening in tomorrow's overnight session is going to give me a clear bias. I do want to check to see what the news is going to be. So we do have unemployment claims in the morning and then home sales at 10. So not really too much to worry about. But do be careful in the pre-market session. Anybody have any questions? Justin, why we take ES long at 10.18, 1 minute fair value gap, then NQ forming SMT. Also, ES was looking stronger than NQ, same like yesterday. Why were we focusing on NQ at that time? That's the confusing I was having. Let me try to figure out what you're trying to say. Hold on, let me zoom in. 10.18, 1 minute fair value gap. Okay, let me see. Why you wouldn't take this fair value gap? Is that what you're saying? This one right here? Yes. So the reason I would not take this fair value gap is because we formed equal highs. Whenever we come up and initially form equal highs, this becomes a future target. This is too early. So this is, I'm actually, great question. This is a really good question because a lot of people I've actually seen struggle with this, right? They get confused. Again, I always say equal highs will act as a magnet. Yes, equal highs will act as a magnet when you get new structure, because this is what ends up happening. Again, we need equal highs to form first. What do you think happens when we form equal highs? You think we're just going to go end up taking those equal highs first? No, we're probably going to sell off, create more structure for those equal highs to then be a future target for us, right? So for example, any time that we have some sort of buy side or sell side level, right? Where, you know, we're coming up, whatever it is, we form, you know, we put in a high and then we come back down fairly quickly, or like, no, let's say that's our initial high and then we end up, you know, coming back down, whatever it is, and then coming back up again, and then we form equal highs, and then, you know, we have a fair value gap right here. I would not long this fair value gap. I would not long this. The reason is the only way for me to take some sort of long targeting these fair value gaps is, number one, if I can get some sort of internal liquidity being swept. Number two, if I can look for some sort of fair value gap or inverse, right? Now, if I have a fair value gap here and it's in discount, keep that in mind, it has to be, I have to retrace back to discount first, right? Then I could maybe look to take it long. But what I would really like to see, and what's probably the highest probability, is to first put equal highs in, then look to see a change of structure, then look to see some sort of sell side swaps. Then I can look to take some sort of long here, targeting equal highs. But right when we first put in equal highs, you never want to take whatever that initial one is, because a lot of the times you're going to put in those equal highs just for market to, you know, go to whatever that recent low is, right? Or that recent high. And then that becomes a future target once we get new structure. Does that make sense? So simple, but so hard to notice these setups live. It just takes time. It's all experience, right? That's why we do these charting sessions, because the more that we get to see it and the more that I get to go over it with you guys outside the market, the more our eyes are trained to see these things. So notice what happens here, right? We put in these equal highs, this fair value gap fails, and we go back to sell side, right? So now this is why that initial long I took, I was kind of fine getting stopped out here, because I kind of got unlucky. This was a manipulation move out of nowhere. I thought some like news happened or something. But because I had some sort of sell side being swept, and then I got displacement back to the upside, and then I looked to take a long, right? Targeting equal highs. So that was a fine setup. I'm totally fine taking a loss on that. And then, again, coming back to discount of this range, bouncing off 30-minute, looking to see internal break of structure, and then I took another long, again, targeting equal lows or equal highs, and then I made back that loss and more. Can you go over macros? What are those and how you put them on your chart? So macros, the only way I put them on chart is just by these indicators. It's just an indicator by Lux Algo that it's the times of day that the macros run. So macros are intraday algos that run that drive towards whatever the opposing liquidity pool is. So there could be accumulation macro, manipulation macro, distribution macro, whatever where price is currently doing, it sits. So for example, like let's look at NQ, right? And we'll look at the 1 minute, and we'll look at all of the macros that happened today, and look what happened, right? Okay. First time of day. I don't really look at this because this is pre-market. All right, first macro that happens. Don't really mind the names. A lot of the time, the names are kind of auto. I mean, I do agree with this. This was 100% a manipulation macro, but I wouldn't say this is accumulation macro. I mean, it technically kind of is. So looking at the price, right? Okay. We come down to this low. Accumulation macro opens at what this time, right? 9:50 to 10 o'clock. Okay. What do you think is going to be the opposing draw here? Probably this low. What do we need to see happen first if we put in a low here and we don't end up taking this? Retrace back to discount. So we put in our fib, we get a retrace back to discount, and then initially sell off, and then right when macro ends, we end up taking that sell side. Okay, next macro. Accumulation. Notice, right when we end up taking recent buy side level, what happens? We get a big run up, big run up, big run up. Literally the second this opens, the first minute, actually not the first minute, 1, 2, 3, boom. Manipulation macro runs, get a massive move to the downside right when the macro opens up. Big move back down, starts to run back up. Next macro, expansion macro. We have relative equal highs, acting as buy side. We're coming down, coming down, coming down. Again, failing to displace lower. What does that mean if we're failing to displace lower? We'll probably want to go back to whatever that high is. We sweep this low in the macro. What are we expecting? Big move back up. Expansion macro to back to the upside to sweep buy side. And then I would say this is more consolidation, but yeah. And again, I don't really look at anything outside of New York session. But macros are times of day where if you get a setup, it's more probability if you can trade it inside of whatever the macro time is. Can you look at NQPM session 5-minute inverse trade? Let me see which one you'd be talking about. The only one that I would see inverse trade would be this, but I don't think this is a valid trade to take. If this is the one that you're saying. Below this one? Yeah, so literally any of these, because I would expect a 15-minute to be here. So we have this 15-minute fair value gap. I wouldn't look to take an inverse on this. Again, this is way market literally closes right here. Like markets closed at this time. So to me, I'm not even worried about that. Can you go over the PM trade again? The ES one? Yeah. Okay. So ES, again, we have equal highs. Get a big push back down. At this time, I'm probably a little bit more bearish. We have break of structure. Right when I see us come back up and we end up disrespecting this fair value gap, I'm expecting to draw higher. I expect this to become low resistance liquidity run, right? We don't come up to break this side. We don't come up to break this side. We don't come up to break this side, but we come up to break these equal highs, right? So I'm expecting a big run up. I had somebody in the chat at the time being like, we're consolidating. Should I take it off? Oh my God. Oh my God. Guys, patience. Market. If you're in a trade, let the market go to whatever the draw is. Notice I held through all of this slow action, and then we get a big move, take out buy side, right? I'm not afraid to hold through this. Let the market do its thing, right? If you have a setup, it doesn't matter how fast it is, doesn't matter how slow it is. Let the market do its thing, right? So looking at the 30-minute, my bias for this was this. Number one, I don't think that this would have been some sort of break of structure or buy side being swept. And the reason is because we had insane amount of displacement through this level. So this to me is more of a break of structure. So this pullback is not a sweep back to the downside to sweep sell side. It's more of redistributing price into this fair value gap. So once I zoom in and I can see that we bounce back, I see this 5-minute fair value gap, and I'm expecting this to now become inverse. Once I see us break through this, we have a 5-minute fair value gap that ends up forming here that I watch to see us come back into to see how price reacts. We come back in, we hold. Once I see us get bought back up and we're continue to hold this, I enter long right here, targeting, again, notice this move back to discount of this range, right? Pull back to discount of this range. Actually, we didn't reach discount, did we? We did not reach discount right here, but this push enough was me because this was respecting that 5-minute fair value gap. Big move back to the upside. Once I saw this first fair value gap get touched back into, that was my long entry targeting equal highs. Again, expecting this to become low resistance liquidity run. Again, using all I'm looking at is what's being respected, what's being disrespected. Number one, we're respecting big 30-minute fair value gap. Number two, we just had a big move back down. Are we expecting to see sell side? Probably. But market's telling me we don't want to see sell side. We just ran this entire fucking fair value gap right here, right? We just ran this entire fucking thing right here. So do you expect that we're probably going to end up rejecting that? No. We just ran this fucking thing. And we have equal highs above us. All right? All it is just recognizing price action. What's being respected, what's being disrespected. And then using certain entries probability, good risk management, proper position sizing. There you go. And it's just building the discipline to continually practice your edge, continually backtest it. What happens when we break structure and displace but lose the trade? What happens when we break structure and displace but lose? What do you mean? Do you meditate? Of course. I think meditation is huge. Meditation changed my life in the way I think. I highly recommend everyone to meditate. I think if everybody in the world meditated, then we would fix a lot of problems. Justin, on the NQ buy side sweep around 220, would you first wait for a 5-minute market structure shift before considering a fair value gap long? NQ buy side sweep around 220. Two 220 EST or when? Because my 220 is when sell side got swept. Is that what we're saying? This inverse trade. Let me see. Yes, this was a valid long. Yes, I like this long as well. We talked about this on ES. So the exact same long, but flipped on NQ. Yeah, exactly. Sell side swept. What are you looking for? What's being respected? What's being disrespected? Boom. We run this 5-minute bearish fair value gap. What does this now become? Inverse, right? What are we targeting? Whatever the next imbalance is, or whatever the recent high is. What's the next imbalance that's unfilled yet? This 5-minute fair value gap. Guys, if you simplify trading to the market moving from PD array to PD array, that's all it is. We're literally just moving from PD array to a PD array. I'm a little confused on how I should be doing my larger time frame charting. Should I use the actual September contract for the ES chart? ICT uses the actual contract, but sometimes it's their data for back. Use NQ and ES. Don't use the contract because you want to, again, bigger time frame analysis is huge. When you're actually trading, again, if you're trading on TradingView or whatever it is, then you can use the actual contract. But again, in my opinion, it doesn't matter. I like to use the other ones because I can actually see past price action. Do you do it seated? Yes. I do it in my bed and I lean up against my backboard, straight up back with, my legs out, and that's how I do it. But I am seated upright. Sorry, sell side? Yes. Wait, let me go back to the question. Justin, IQ around 220. Would you first wait for 5-minute market structure shift before considering a fair value gap long? This is your fair value gap long. Is this getting disrespected and then you have a bullish 5-minute fair value gap? Again, if I zoom in, this is the exact same thing on ES, right? What are we waiting for? Displacement back to the upside. This would have been your premature entry long. I would not expect you to take this long. Again, that's a little bit too early. I want to see a little bit more, clarity. Again, what would I wait for as well? This 1 minute, we have a big 1 minute here. So what would I expect here? This to get ran through as well. Notice, what does this become? Notice, every single fucking thing here does not get disrespected. Notice, ever since that we start getting a push down. Okay, we have a 1 minute bearish. We respect it. Wow, okay, we continue going down. Okay, come down, come down, come down. Respecting everything, respecting. Pull back to bearish, respect it. Pull back to this bearish, respect it. Pull back to this bearish fair value gap. We don't break this, right? We don't break this, respect it. Go back lower, right? What are we disrespecting? Bearish or bullish fair value gap right here. What are we respecting? Bearish fair value gap right here. Goes lower. This is the first time after buy side or sell side being swept where we invalidate and we reject and we displace through a bearish fair value gap. Notice the first one that gets ran through starting, what happens? Start of trend back to the upside. What would be a reason that we lost trade when we got break of structure? Like, why would be a reason that we lost that trade when we got a break of structure and displacement? Are you talking about this ES one here? Which one? This one? Yeah. You just sometimes lose them. Again, I'm not really mad with this trade, to be honest. I would have taken this any day. Reason is because we get internal swept. We're still in a really nice bull trend. We come up again. We end up holding it, getting big move up. In my opinion, this was just a manipulation move. We just got caught in a manipulation macro. Yeah, this is a good setup. Again, even good setups are going to sometimes fail you, right? But this is everything I want. I'm in a bigger time frame, bull trend. We come down, sweep internal, get displacement back up, pull back to fair value gap. I'm targeting equal highs, right? Equal highs above us. I'm fine with that setup. So I'm totally fine taking that loss. Anybody online you recommend to learn more about meditation? If I'm being completely honest, like I will give you a lesson on meditation right now. Meditation is not hard. Like when 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 I like wanted to learn how to meditate, I thought it was like some crazy fucking like, oh my god, I gotta channel my inner fucking lion or like some crazy shit. Literally, all it is I want you to sit somewhere comfortable and I want you to set a timer for 10 minutes. And when you first do this, that 10 minutes is going to feel like eternity. It's going to feel like you've been doing it for 30 minutes to an hour, right? Now, if it feels like it's an eternity, that means that you should be doing it for even longer. Now, this is what I want you to do. I want you to find somewhere relaxing, get comfortable, and I want you to focus on your breathing. I want you to close your eyes, and I want you to only focus on your breath. Deep inhales through the nose, large exhales through the mouth. And I want you to primarily just focus on your breath, only your breath. And you'll start to find your mind drifting. All of those background thoughts that are constantly running through your head, oh my God, I got to pick up my kid. I got to fucking go do this. Oh, I'm so bored right now. Oh, ice cream sounds good. Like dumb shit, right? Constant, random stuff through your head. When you are simply relaxing and you're just and you have your eyes closed and your only thing that you're focusing on is your breathing, and you do that for 10 minutes straight with your eyes closed, you fall into a state of relaxation. And when you end up ending the session or your alarm goes off, you will find yourself with the clearest mind that you've had in a very long time. And this ends up creating a lot of relaxing sensations in your life. And a lot of the times, ever since I started meditating, it is caused me to be a lot calmer of a person. I don't get stressed out very easily. It's, I'm controlling of my emotion. It's completely helped, the way I trade as well. Is it better in the dark? It doesn't really matter. I do it in like more dim lighting, I would say. What time do you do it? It depends, honestly. It kind of depends on how I'm feeling. Sometimes if I find myself, being anxious early in the morning, I can do it after I'm done trading, or even when I'm in trading. Sometimes I'll find myself, sometimes I would, it'd be in a trading session and I would be super, super anxious. And I would recognize my emotion. I would say, Justin, you are way too anxious right now. I can feel it. Like, you feel this fucking emotion. Acknowledge it, right? Don't push it to the side and just keep trading. You literally are the one feeling this emotion right now. Step away and start to bring this back down. So I'll step away. I won't trade and I'll go meditate. And I'll feel completely better afterwards. Or a lot of the times I'll do it at night before I go to bed. I took this earlier 301 EST on NQ for a nice snack. Not sure if optimal entry. I saw the inverse for value gap held, solidifying draw on liquidity to the upside. Take the next for value gap to the downside or upside. Yeah, this is good. Again, see this. Okay, so the reason why this is good is because even if you miss this initial trade here, right? Even if you miss this initial entry here off the inverse fair value gap, once you see the rejection, or once you see that we're holding and on the draw is lower, you take that next fair value gap. Absolutely. Yeah, this is a great trade. Yeah. And a lot of the times, I would take this, 100%. And honestly, I prefer this, honestly, sometimes too, because if you're even, you want to wait for the most prime optimal setup to like have the most confirmation, this would be it. Because you're not only waiting to see the inverse get broken, but you're waiting to see the inverse hold. Once the inverse does hold, then you take that next fair value gap. Yeah, so great trade. You think the 15 5-minute inverse on NQ from overnight was a valid area to see morning price hold / disrespect for a cleaner view on drawn liquidity? 15-minute inverse on NQ from overnight was a valid area. This morning price or tomorrow morning's price? For this morning. Which inverse? Wait, I'm looking at ES, sorry. Oh, are you saying this one right here? Yeah, absolutely. I was also looking at this as this 30-minute. Or 15-minute, sorry. But yes, absolutely. Again, when we break through this, what does that become? Yep. When is the worst time of the day to trade? Lunch. Would you trade right now? Absolutely, definitely not. I know you guys want to take these longs. I know you do. And you can take it on paper or take it on a small account, whatever it is. But me personally, I don't really care to take any. I know you guys want to take this. Again, it looks like a good setup. Tomorrow we're going more aggressive if we get some good setups. And more aggressive, I don't mean more size. I just mean less hesitation. When we cleared the low on the example, do you choose the inverse or that newer fair value gap to enter off of? When we cleared the low, which one? This one here or the one on... Am I saying this one? Do I take the trade on the inverse or this one? Is that what you're saying? I take it on this one. Now, if there is one here, but sometimes there's not. Like if we're looking at the trade on ES this morning, or sorry, not on ES, on NQ. Right, this one right here. There was no fair value gap for us. Now, there was, but not where I would enter. I wouldn't enter this fair value gap. I would enter the inverse because this would be the sweep here. This is retail getting stopped. And then once I see this get disrespected, validating my thesis that the draw is higher, then I look to take the inverse, right? Because there's no, all this is chopped. There's no fair value gap here for me to enter. So once we break above, then that's my entry to take longs. I'm still confused on why retail gets stopped there. Okay. We have to think like an institution, all right? I want you to think about this in a logic, like, okay. So number one, first thing that we have to understand is we do not move the market. Me and you, retail traders, we do not move the market. We do not have enough capital. Even if every single person in this Discord, every single person in every trading Discord in fucking existence pressed buy at the exact same time, it would do nothing. Literally nothing. Because we are such a small fraction of the capital that is traded in this market. Now, retail traders study the exact same concepts. And a lot of the times, retail traders will generate large amounts of liquidity. Now, the reason I say we don't generate the large amounts of liquidity is because we don't have the capital to do so at a single time. But institutions take advantage of retail traders using order flow and using recognition of where stops are being placed, right? Now, since these institutions are trading such large amounts of capital, they need to generate liquidity to fill their orders, right? Because again, we have to think of what auction market theory is. This is an auction market, meaning I am buying from somebody selling, or I'm selling to somebody that is willing to buy, right? Which means if an institution is trying to get filled of millions of orders, you just can't enter that because you're not going to get filled. I mean, you're going to get filled, but a lot of the time, it's going to be very hard. It's not going to be an exact area, right? Because again, if you look at a price ladder, we won't get into too much of like specifics of like volume profile and like price ladders, but the way that you need to think about it is when we get this stop here, number one, this is the first thing. This is already retail getting stopped. Our whole concept of what we trade and what the draw on liquidity is we are looking to inverse retail, or we're looking to fuck retail. Because again, if anybody is short after sweeping this high, right? If anybody is short after sweeping this high, where do you think they're going to put their stop loss? Right? Think about it logically. If I am short after sweeping this high, where do I put my stop loss? At this high, right? I enter short and I put it at the high. Where do you think markets are going to come back to take that liquidity? Come back to that fucking high. So anybody that's long at this time, right? If I'm long in this fair value gap, or I'm long targeting highs, where do I think I can put my stop loss? At the low. Retail traders have been told and taught that stop losses, price targets, whatever it is always going to be some significant high or significant low. That's how we are as creatures. We want it to be natural. We want it to look clean. So all of these levels that we end up placing are shown on order books when looking at some sort of institutional order flow. When we come down here and we sweep this level, this is already getting stopped out orders, right? This is retail already getting stopped out. Anybody that is long is getting stopped out of their positions. This is already generating liquidity. That's why when a lot of new traders come into the space, they find themselves getting stopped out just for the market to go back in their favor, right? Why is that? It's because you're fucking generating liquidity for institutions without you even realizing it. You're getting fucking used, pretty much, right? So what happens is once this gets swept, right, retails are coming back in. Retail's like, oh, fuck, I should inverse this now. I just got stopped out of my longs. I'm right now, right? Because I'm in longs. Oh, I got stopped out. Oh, wow, I was actually right. Let me get back in this position. Okay, I get back in this position, somewhere up here, whatever it is. Where do you think those stops are going to be placed? This low, right? Because this is the initial entry in that fair value gap, right? Targeting buy side. So when we come back down, again, at this point in time, we would expect this fair value gap to hold, right? If we're bullish, we would expect to see this, right? We would expect to see this fair value gap hold and go straight to buy side. But we don't. We wrecked right through this. This is a manipulation move to come back to stop out all the rest of those retail traders here, generating more liquidity for institutions to then push back up to buy side, to then gather even more liquidity from the highs, right? And take advantage of that move, right? After stopping all of retail out. And that's why we also have an SMT divergence. Because looking at ES ends up coming down and sweeping that low. So this is the SMT divergence that we're forming on NQ. So when we come back down, sweep this low, in the live session today, I told everybody this is most likely going to be institutional order flow entry drill. What happens? Big run up back to the upside. Does that make sense? I'm hoping I explained that in a way that made sense. Why can't we enter that fair value gap again? You can. You can. But again, at this point in time, I don't want to. I want to see the reaction. Because number one, I don't know if we're going to sweep this low or if we're going to break through this to go see lower. And the reason is because this is why it's faking you out. Is because if I'm expecting to see higher, I would expect this fair value gap to hold, but we disrespect this. So for me to take some sort of long, I would see this get disrespected. Then that's validating my setup, right? Because this is that internal low being swept, stopping out retail. But I don't know if we're going to break through this or not. So I don't want to just enter when we come back into this. I want to wait to see that initial bounce, see this get disrespected first to, approve that my draw on liquidity is going to be right, and then I look to take a long. You the best teacher so far I found in the best community. Much love, Jason. Why don't you enter the first tap? You do. But that's what I'm saying. If we're looking to take a long here and I enter on the first tap, where do I put my stop? Because this is going to be my half off, right? This is my first price target. And then I'm like, all right, put my stop to break even. Come back, stops at break even. Everybody that was long is now getting stopped just to then run up to whatever that high is. So this original long is not bad, but in my opinion, I wouldn't take this because we don't get any market structure shift. Now, the reason I would take this is we have more structure. We have some sort of internal sweep. The body, there's no displacement. This is not break of structure. There's no displacement through this low. We sweep this low. There's no close below this. Again, what is a sweep? What is a break of structure? Displacement. Any high or low, any break of structure, whether it's to the upside or the downside, needs to have some sort of displacement, right? Why do we not go lower here? Why do we not just flush here? Because notice, no displacement through this low. We come down, break through it, instantly displace back to the upside. Clear sweep. Okay, what is a break? Again, come up here. Do we break through this high and displace lower, or displace higher? No. Displace back down. What do we expect the draw to be? Lower. Wow, we come up here, sweep this high, no displacement through it. What do we expect? Back down. What do we come back? Sweep this low, no displacement through this low. What do we expect? Higher. An SMT it stands for smart money technique. It is a divergence between ES and NQ. What happens when retail stops getting stop losses like that? It won't. Guys, they're not going to change the algorithms. And that's one of the least of our worries right now. Now, it's a good question. It is, for sure. That's always something that we can ponder. But in my opinion, until I am having like month loss streaks, then I would be like, all right, maybe something's wrong here. I was like, all right, maybe something they've changed something. But until that happens, there's no reason to have any worry about that. Justin, back when you first started trading, did you ever have days you would just full port just because? Oh, absolutely. I had no discipline. 100%. I would be like on my shit for like a month, and I would wake up one day. I wouldn't even be feeling a certain way. I would just break my rules and I would blow up my account. Absolutely. Because I had no discipline. Again, because all it takes is one day for you to be like, wow, you know, this one trade, I'm confident in this. If I over leverage, or like, I could make fucking like, I'm going to bring my account to this or whatever it is, right? I need to prove to this. I need to make money. It's always something other than actually trading. You need to prove something. You need to make money. You need to fucking show somebody up. Whatever it is, you're not actually focused on taking good trades. You're focused on the outcome, not the fucking input. That's the problem. Any other questions, guys? Starting streaming on 250, is it okay to risk like 10%? Not worried about losing 250. If I'm being completely honest, I would not even trade a $250 account. Use that money to buy a funded account or an evaluation account. 250 is going to do nothing for you. Why don't you trade Dow? I just never have. There's no really specific reason for it. I just never have. It's crazy to find out your passion because I've been sitting here for an hour and I feel like 5 minutes have passed. But when I'm sitting in my lecture for my major, that I felt I would be wanting to leave in 5 minutes. So glad that I found you and knowing I will eventually be successful. That means a lot, Cole. Much love, brother. I'm glad that you guys enjoy this for the people that, again, this is my favorite part of the day. Is I would much rather do the charting sessions than the live sessions, because the charting sessions are where the actual knowledge. This is where you actually grow. Is this? So, yeah. How do you trade better lives / with combines? I'm not doing well because of my emotions through chop. I cut early. You just have to learn to be patient. Look at all of the times where you decide to cut early and journal it. If you're journaling your trades, you should be able to go back and say, hey, look at all the trades that I cut early, and then look at the outcome of it, and then see how many of those trades actually ended up working out. And then all you got to do is just end up building confidence with that. I know the difference. Hey, the people that are still here, I just want to say I love and respect every single person that is still in this charting session, because I know that the people that are still in here are going to be the most devoted, the most disciplined, and the most driven to be successful, and you will outrun every other person in this community. And it's sad to say because I want the best for everybody in here, but for the people that are still here, you want it bad, and I respect that, and I want you guys and I want all of you to see success. I think I can pivot from my corporate 9 to 5 to trading in the next 6 months at this rate. Again, don't focus on that, right? Don't push it. I know you want to quit your 9 to 5, but 9 to 5 is what's going to support you, right? Again, a lot of the times you got to think about it this way as well, right? When you quit that 9 to 5 and you go full-time trading, there is no support. That's a big risk, right? You always want to have that support by your side, even when, you're trading, right? When you're learning how to trade, even when you're profitable, I would still say keep that 9 to 5 until you have at least, 6 months of profitability where you can prove to yourself, you're ready to really take it on full time. Much love, guys. Top G of trading. I'll try my best to be here in the charting sessions every day, bro. Much love from Thailand. Of course, brother. And again, guys, it's okay if you can't make it, but just again, charting sessions are recorded every night. Exactly. That's the biggest thing as well. Stable income is going to help with emotion, because when you're risking that you can afford to lose, right? That's the biggest thing. Are you risking in whatever you're putting on the table? Can you afford to lose it, right? Like we said earlier, every single trade that you take, you should expect to lose, right? And every trade that you take, you should expect to lose. That means that there is no other added emotion on the table. Do a meet and greet in Miami? I probably will. I probably will do one day in the future. All right, guys. That's all I have for you guys tonight. It's been an hour. Thank you. I love this shit. I love this shit, guys. And I love teaching, and I love having this community and just doing everything here. And I'm very thankful for everybody here, and I'm excited in seeing everybody grow in the past, 6 months. It has been an absolute blessing, and I'm glad to be here every day with you guys. So enjoy the rest of your night. Get some rest. Yes, go start meditating. Learn to meditate as well. And I'll see you all tomorrow morning. Enjoy the rest of your night, guys. Peace.